Good morning, good morning, good morning. Smash the likes, guys. We're going to begin soon. Let me just set up some charts. Also, give me a quick voice check. Is the music too loud, too low? Can you guys even hear it? Etc., etc. We're going to begin. Good to see you in here, Julian. Chris Glock, my man. Didier Van Rompuy. And we have the beautiful, the gorgeous, the one and only Krisha. Frank, my man. Frank takes notes, tank. Cassandra, how's it going? Cassandra says, I hope it's you today. Oh, man. Sean will make a good preacher. He shares his insights. It's so good. But he rambles. You get straight to it's so true. Oh my God, so true. 100%. I was talking about this on the Discord too. I was like, man, I felt so bad. I didn't give them any TA. Today we're going to do actual TA. But on another note, Cassandra, just like a week ago, Krisha was telling me, Sean, you'd be a good pastor. I'm considering, actually, after all of this is done, finding God. And I'm not joking about that. I may actually do that. But because, honestly, when I was a kid and my grandma wanted me to be a priest, she said the only way I could do it was if I agreed to never get married, right? And I love women too much. But apparently, as a pastor, I could do both, right? I could continue to love Krisha and still be with God. Why not? All right, we're going to have some fun today. There's a lot of scary stuff going on in the markets that we're going to have fun with, because that's what Mango does. We laugh in the face of danger. Krisha's laughing at the idea of me being a priest, a pastor. Don't kill me. Alrighty, let's go. I haven't really had too much time to set up the charts. In fact, I just washed my face, so we're just gonna jump right into it. I'm having a really bad headache. Let's go. Where the hell am I? Where are my windows? Is this it? Oh shit, this is it. Welcome back to the Mango Grove. Good morning. Fasting is on it. What are you guys talking about? We have important things to talk about, guys. Okay, enough of the nonsense. Let's jump right into it. What are we seeing over here on the dashboard? app.mangoresearch.co. Oh my God, it's red across the board. Short. A few neutrals, a few of what? Everything short and XRP is long. I am awake, right? Yeah, it feels like I am awake. What is going on here? We have XRP showing long while most of the market is freaking red or gray, neutral. Volatility is really high across the board. What we do want to do is go ahead and look at the weekly time frame over here. We're seeing a short trend across the board for the market, okay? And the volatility is blue. That is not a good sign at all. And I understand why many of you want to hedge your positions over here. Just before I continue, just give me a quick voice check. Can you guys hear me a-okay? Should I reduce the music? I don't want to go on too long without getting that check. How about now? Are we good now? Jesus Christ. Hey, how's it going, Saurav? Yeah. So the edge crypto says the perfect trap. Here is the question: is this a trap or not? Like we're seeing over here, right? The markets are not looking good. Okay, we have a short trend across the market now. So basically, on average, the market's trending towards the downside on the weekly time frame. If you go ahead and focus on Bitcoin alone, we are seeing short on the weekly, short on the 4-day, short on the 2-day. The 4 hours long, the 12 hour is long. That's a good sign. On the lower time frames, we are beginning to pick up the trend. We are beginning to threaten the high time frame short trends. The daily has just flipped from short to neutral. Another really good sign. This flipped only today, this morning, but you got to call a spade a spade. The 2-day is still short. The 4-day is still short. The weekly is still short, right? So for those of you asking me whether or not you should be hedging your positions over here and staying on the safe side, I totally agree with that decision if you decide to do that. Me, however, personally, I am not doing that. Why? Because for my spot positions, okay? For my spot positions, I do not have any long leverage trades. I'm going to give you guys the exact criteria upon which I will be looking for long trades again. But for now, we're only talking about our spot trades because what's really on everyone's mind is this bull market over? Are we done? Are we done? And we could be done, but personally, for me, I don't think so because my cyclical indicators have not given me permission yet to do so, okay? So while this is not the prettiest of pictures, okay, we've been here before. We've been here before on the $25,000 to $30,000 range. It was the same picture, and Bitcoin recovered from this. And our cyclical indicators at that time too were still intact. So over here, what we're going to be looking at first is one of our major cyclical indicators that has stayed bull trend bullish to the upside this entire cycle, which is the bi-weekly. Now, you don't want to look at just one thing. Okay, we don't want to look at just one thing. We want to look at multiple things. And we developed this thesis for our cycle trade all the way back when Bitcoin was sitting at around $16,000, $17,000, right? This is not the only thing we're looking at. Back then, we were looking at far more indicators that, of course, will mature as the cycle progresses. But this has been consistent for a very long time, right? We pushed up into it right over here at around $28,000, $30,000, used it as resistance, oscillated between it, right? We held candles within it, broke above it, and ever since we broke above it, we've been living above it, right? Just boom, 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 boom. Came down to test it over here, July 24th. That was when I had my last spot buy. This candle over here, again, we came down, wicked underneath it, took out the low. It looked ugly, looked disgusting, looked like we were going to close underneath. But what is one of Mango's founding principles that we love to teach over here? Wait for the goddamn candle close. Yes, it's sometimes painful. Yes, sometimes you're going to have to sit multiple days to get your confirmation. But more often than not, in fact, 90% of the time, you're going to be glad you waited for the candle close. And yet again, you guys can see that we wicked underneath it. We tested the lows. It looked like we were going to close, but we are now living above it. But again, we have 2 days and 11 hours to go. A lot can happen in 2 days and 11 hours. This is Bitcoin. This is crypto. And we could very well close underneath over here. The level that we're looking for Bitcoin to hold on the bi-weekly dynamic is 54,300. Okay, 54,300. Now, if you puked your positions out over here, I know it's painful, but sometimes you got to go through that pain to learn from it. You got to go through the pain to learn to wait for the candle close. Okay, if you got stopped out of your position, if you had stop losses over there and you got wicked out, it is what it is. Okay, it is what it is. Sometimes that's gonna happen because you're. By the way, guys, you should never ever get stopped out because you're using your stop loss as your invalidation. Okay, very rarely should that be the case. Very rarely. Okay, the only times your stop loss should trigger your invalidation is if taking out the high or taking out the low is your invalidation. Okay, and those trades are essentially breakout trades. Why would you have a breakout trade stop loss on your spot positions for your cycle trades? Right? That doesn't make sense to me. So your stop loss should not ever be your invalidation. Your stop loss should only be an account protecting measure. Okay, your stop loss should only be an account protecting measure. Now, if you guys are in the C program, you guys know and understand this in a much deeper way. If you guys have watched the risk management module, okay, that's what we teach over here, why and how to wait for candle closes. This is why candle closes are so important, because if you have a stop loss and you got wicked out over here and then the candle closes all the way up over here, you're like, oh shit, what just happened? I got thrown out my cyclical positions for no reason. So how is this looking? This is looking fine for now, right? Yeah, in hindsight, or rather during the time it looked like crap, but for now we're holding above, and as long as we're holding above 54,200, 54,300ish, this is a-okay. It would be fantastic if we can hold above the top of the bi-weekly dynamic coming in at 58,956. Okay, so 59,000 on the upside and 54,300 towards the downside. Okay, that's the zone we're looking for Bitcoin to hold. So bi-weekly looking fine. What's the next indicator we're looking at over here? Now, I haven't brought this up in a while, or rather we've not given it too much attention in a while, but it is one of our founding indicators that allowed us to get bullish for the cycle play all the way down over here, right? In fact, this was the indicator. This was the clue that we had, where we're like, hey, we have moved very far away from the cloud. For those of you who are just joining over here, this is the Ichimoku cloud. I'm going to go ahead and take a sip of water. This isn't water, by the way. So yeah, Chris Clock, exactly. Kumo twist. We're going to talk about that very, very soon. This was exactly what we used to get bullish over here, right? The Kumo twist is usually where we see price get sucked into the twist. When price is living underneath the Kumo twist, you tend to see price move up towards it or down towards it, right? Now, this is essentially an equilibrium play, and because we were sitting so far away from the cloud, we were like, okay, this is getting combined with a bunch of other things that we were looking at, right? We were like, this is getting far too overextended. We had the cascading pattern play over here too, where we had the fake out breakout pattern. I'm trying to draw it. Okay, we had a falling channel, broke underneath it, accumulated, broke out. That triggered the move to the top of the cloud over here, which is why we had a target at $42,000, right? Now, similarly, you guys know, if you guys have been following us over here at Mango, whenever we're living above the Kumo twist, whenever we're living above the cloud, we look for that higher low. But the way I like to play it is that we know the high low is coming in, we just don't know how deep. Okay, how deep. It could go all the way into the Kumo and turn bearish, or it could come in, get picked up, and continue its trend. So we have to be cognizant of that high low. We just don't know how deep it's going to come. Honestly, guys, I actually thought that this would not play out this time because it would be so obvious, right? Like things, like it gets sucked into here, it gets sucked into here. I'm like, could it really be that simple? I personally thought that this was it. Okay. When we had this low over here, I was like, okay, this is going to be the low, and if we do break back to the top of the range, I think we're going to continue, which is why I had moved my bids, which I had over here on the Kijun. We have a weekly Kijun over here. I can show it to you guys really quickly. I had bids over here. Okay, I had bids over here on the Kijun. We talked about this, right? How historically having bids on the weekly Kijun, just keep them and trail it throughout the cycle. You're going to be rewarded for it. I had bids there. And when I didn't see price come down there, or didn't show signs of wanting to come down there, I moved it and just bought over here. So I regret that. I made that mistake. And then what do you know? We come and tap the weekly Kijun, going back to the clean chart. Okay, so this was the play. This was where we were looking for price to get sucked into the Kumo, twist over here, find equilibrium. And then we said this: we're going to turn bullish for leverage trades only if the cloud flips green. Okay, until then we're going to be on a defensive posture. Well, the cloud flipped green, right? Somewhere around here, around 48,000, 50,000, cloud flipped green and has remained green. And once the cloud turns green, every opportunity, every dip is a buy opportunity. Okay, once the cloud turns green, we don't know if it's going to be correct. All we know is that that's our strategy. That's what we're going to play. That's what's worked in the past. Where as long as the cloud is green, you look for every opportunity, every dip to be an opportunity until you hit your targets. And our targets were around 120,000, 150,000, right? So that still holds true. The cloud is green. We dipped. We have to be looking at this as a buy opportunity until your cyclical indicators turn bearish. So combine the two. Bi-weekly is still holding true. Okay, we're still closing candles above it, and the cloud is green. You have to combine those two ideas and be like, okay, this might be scary, but I need to be looking at this as an opportunity until proven wrong. When are you proven wrong? If we close underneath the bi-weekly dynamic, or based on this indicator, this only flips wrong, by the way, if we close underneath, at the moment, $42,000. Okay, yeah, it's a bit lagging, but that's when this is proven wrong, if we close underneath $42,000. Now, could this be the cycle end? If you just do a simple Ichimoku time analysis, you can see, just by glancing at this, right, you can see that whenever Bitcoin flips the weekly cloud green, it stays green for a long period. Okay, stays green for a very long period. This has barely stayed green. Like it's been green for only 161 days. Compare that to this cycle, we stayed green for 700 days. Compare that to the previous cycle, we stayed green for 700 days, right? So just looking at this alone, it's very hard to say, you know what, this cycle is going to be that much different, and we're gonna end this bull cycle really, really quickly. I'm not saying we're going to stay green for 700 days, by the way, okay? Maybe it could be 500 days, maybe it could be 600 days, maybe it could be 450 days. It's just really hard for me to say, you know what, we are holding the bi-weekly dynamic, we are holding our other cyclical indicators, and the cloud has been green only for 161 days. I think the cycle is done. Right? Do you guys see what I mean? This has only just turned green. It is really hard for me to say that, hard for me to believe that the cycle is done. Now, if we do break underneath here, underneath the bi-weekly dynamic, I'll be like, okay, cool. The cycle is doing something different. This is the change in behavior. But until it does that, it's hard for me to believe that the cycle is done. Okay. Now, what else? Mango Delta X indicator over here. This is a seedling only indicator where we have a bunch of different settings at the moment. I'm using the SMA setting on the monthly time frame. And again, if you guys were watching this, honestly, when things are getting euphoric or things are getting extremely scary, like anxiety driving scare, don't look at price. Just look at this. Just look at this. Just double click it and look at this. And you would have seen, based on, by the way, for those of you who are on the C program and don't know about this indicator yet, you should be having access to this indicator. Just fill in the form that you will find in the Mango Seed private chat. You'll get access to the indicator, and there's accompanying videos with this too. Strategy videos on how to use it, how to set it up, etc. I'll be doing more videos on it very, very, very soon. But just using the simple videos that I've always shown you guys, you would have been looking at this and saying, hey, this is a buy opportunity, right? It would have kept you cool as well. Forget price. Don't look at the red candles. Don't look at the green candles. Just look at this. When we come underneath here and you're looking at the duration of the cycle, you're like, hey, you know, this is a buy opportunity. If we start breaking underneath, you're like, okay, cool, I'm done. I'm out of this. And similarly, if we start living somewhere around here, you can start scaling out of your position. Right? Start scaling out, taking profits. You're not looking at the big green candles and getting excited. You're looking at this and like, oh man, this was cycle top here, cycle top over here. I'm looking at this zone over here as a potential cycle top again. As simple as that, right? Do not let the candles bait you into staying into the cycle or lure you into getting kicked out of the cycle. Watch this indicator and keep your cool, okay? Now, so yeah, 1, still bullish. 2, still bullish. 3, saying buy the effing dip. Okay, this one's actually saying buy the effing dip. What else? Any questions before I go on? Oh yeah, if Chris says does war or threat of war have a big influence? Yeah, I think if we go through another tail risk event of actual war exploding, that's going to be probably bigger than COVID, man. We don't want to, like, World War III, right? That kind of thing. Like if you have like these, I don't want to say small wars, but for lack of a better term, if it's something like Ukraine versus Russia, isolated wars between two countries, yeah, that's a better term. If we have isolated wars between two countries and we don't start seeing external countries get pulled into these conflicts, that's when I think we can kind of contain it. But it's shitty times. We don't want to see escalation where other countries are pulled into existing wars. That's what we don't want to see. Okay, cool. Now I'll answer the question of whether or not it's time to be taking leverage trades. And the answer is no. Again, very, very simple, repetitive, redundant analysis that I've been doing ever since this region over here, right? Above the 4-day dynamic, you can start looking for leverage trades. You may get kicked out, like we got kicked out over here too, right? May get kicked out, and then you may reclaim it, and then you put on your leverage trade again, and then you go for the trend. Same story here. We got into a leverage trade over here on the 4-day dynamic. Boom. Looked for continuation. Did not see continuation. Got kicked out of our trade over here. Price dumped. We were safe because we exited. And now we've come and rejected the 4-day dynamic, right? Yesterday, I posted this on Seed saying that we are sitting on dynamic resistance across time frames. In fact, the daily, the 2-day, the 3-day, the 4-day, right? This entire zone has a bunch of dynamic resistance levels over here, and we're seeing resistance over here. So until we clear the 4-day dynamic, which is currently coming in around $63,000, I would not be looking for leverage trades. Spot is a different story, right? Spot, you want to be buying on the bi-weekly dynamic and other levels that we've talked about. But leverage, no, I want momentum on my side because I personally do not want to deal with staying in a leverage trade for this kind of move. Like back in the day, in the previous cycles, I would be using the weekly time frame for leverage trades as well. I don't do that anymore. Just reducing my risk, right? So yeah, as simple as that. On that note too, you can use the 4-day dynamic to hedge your positions, right? For those of you who are looking to hedge your positions using this level over here around $63,000, $62,500, $62,600, that is a good spot to say, you know what, I'm going to hedge my positions over here. And if we reclaim the 4-day dynamic, that's when I will unhedge my position. So you are looking for a 4-day candle to close above this, okay? A daily is not enough. Even a 2-day might not be enough. If you're lucky, your 2-day candle close will line up with a 4-day candle close above there. Honestly, look for 2 4-day candle closes for confirmation. Okay, 2 4-day candle closes for confirmation. What's the status for XRP? Last I looked at XRP, you can look at the dashboard too. XRP is looking good on multiple time frames, but on high time frames it is still short, and it's sitting up against resistance when I did look at the chart. We can look at it in a bit today, but XRP is one of the better looking fucking trends right now, man. Okay. It is. Going back to Bitcoin right over here. Yeah. Any questions on this? Before we move ahead, I'm gonna go ahead and do a quick. This is Bitstamp. Yeah, don't need this. Yeah, instead of going long, you should be exactly. You should not be looking for long trades. You should be looking for short trades over here. There is no leverage long trades on Bitcoin, in my opinion. Only spot buys or short leverage trades. We're going to talk about the fun time now, Joey. When the fun time begins. So we're going to do a quick tutorial session here on how to assess whether the trend is going to continue to the upside or towards the downside. Okay, we're going to do let's see, what multiple techniques we can use. If we are using simple trend analysis, we are going to use, let's start with a low, high, low analysis. Okay, we're going to just start by marking out all our key lows. We have a low over here that matters, coming at around 56,442. Okay, then we're going to mark out another low, which is a lower low, coming at around 53,588. Okay, boom. Now we're going to go ahead and mark out the final low, pertinent low, coming in at around 49,500. Okay, so low, right? And you can see that now we have a region of support that the bears are going to be looking to target. The bears are going to want to go ahead and close candles, not just wick through it, close candles underneath all of these lows. Okay, similarly, and now we're going to use a red line. There's going to be there's going to be a high right over here at 74,000. Now remember, these were the higher highs that we were putting in during the uptrend before Bitcoin went into a consolidation. So we have a high coming in around 74,174. Now I'm going to go ahead and mark the next relevant high coming in at somewhere around 72,200, right? You could mark this one too, by the way. Okay, you could do that, but we're going to go ahead and mark this one here because we have two highs there. Then we have another one right over here at 70,207. Okay, so this is essentially the battle between the bulls and the bears that you need to be watching. Okay, the bears are going to be looking to close candles underneath this entire zone, and if we do close candles underneath this entire zone, it's over. Okay, it's over. I'm looking for price to come all the way down over here. Just through this analysis alone. Okay, of course we're going to combine it with our other tools, our objective tools, because this is not objective, right? This is subjective. A law that matters to me may not matter to you, right? Our objective tools are hard-coded, and we don't change it for the entire cycle. I'm like, all right, I'm using this objective tool, this algorithm, this indicator right over here. And for us, we're going to be using the biweekly dynamic. And you can see how there's confluence now. Okay, because if we close between the two lows I marked out, the low at around 56,000 and 53,000, we close a bi-weekly underneath there, it's done, right? We've closed underneath the bi-weekly, and we've taken out 2 out of the 3 lows. The bears are clearly winning. Okay, so going back to the chart over here, the clean chart, no indicators. Similarly, the bulls are looking to target these guys over here. You can see how the job is a lot easier for the bulls considering the current price action. Okay, and the fact that if they go up and squeeze this area over here, which is what we were talking about, by the way, during the Trump conference, where I said, hey guys, don't get bullish over here. Don't get bullish. This whole Trump thing is making me nervous. What you guys should really go watch that live stream, because during that weekly close, I'm like, wait for a close into this region. Just wait for a weekly close into that region. If we see a close there, you can go long. Until then, I say hold back, right? Now it's lining up with this analysis too, where if we see the bulls make their way all the way up into this region over here and close candles into this region, I think we're going 100, 120,000. Could stop earlier. We'll assess that when it comes, but the trend will be back on towards the upside. Could be October, could be August, October too. Up August, or maybe even September. We don't know. I'm not going to try to time that. If history repeats itself, it's always always has August and September equal pain, October, November, retirement. Man, I remember 2017. That was exactly how it played out. August was brutal, September was brutal, and then suddenly, starting October, Bitcoin went from like $4,000 to $20,000, right? $4,000 to $20,000. It all happened between mid-October to first week of December. That was like in no time, like 6 weeks. 4,000 to 20,000. So just be very careful getting sidelined over here while you're seeing the signs. I'm not trying to time it though. I'm just going to be watching price because, yeah. So this is what you guys are looking for. All right, guys, take a screenshot or just do this exercise at home. Okay, now we're going to go ahead and delete everything. Any questions before? Because I'm going to empty out the chart. I'm going to show you guys another technique that you guys can use. Do I use Elliott Wave 6? No, I'm not. Elliott Wave can be extremely useful, and I don't do the analysis over here because it can be extremely difficult for people to invalidate themselves and could get themselves in trouble. If you guys are interested in Elliott Wave, I could start covering it over here because I have been actually diving into it over the past few months and learning. You can never learn enough, right? Do I like the pi cycle indicator? The pi cycle indicator, man, is just a moving average with a multiple, right? Multiple of pi. So if I like moving averages, I'm going to like pi cycle. And the pi cycle indicator is essentially a equilibrium indicator, a cooler and simpler way for people to assess equilibrium. So like, it's a moving average with a multiple on top of it. Ichimoku, in my opinion, is better, but whatever works, right? All indicators are good. All indicators are good. All TA is good. What we like to do is find confluence between multiple methodologies and say, hey, because remember, guys, at the end of the day, here's something you guys need to understand, right? At the end of the day, technical analysis is about finding areas of supply and demand that will give you an edge, right? So basically, if there's disequilibrium or equilibrium at a certain area, you can use that to your advantage, right? When you start finding confluence zones between multiple technical analysis tools, you can essentially say, hey, this zone is likely going to be a zone where a lot of supply comes in because of various analysts all agreeing on a certain area being a good sell price, or a lot of people agreeing that this area is a good buy price, right? So you're seeing a lot of demand coming in one spot, okay, or a lot of supply coming in one spot, and that's what TA allows you to do. Where will you see a lot of market participants come together and agree that, you know what, this is a good time to be selling, or this is a good time to be buying? Because that's what causes the imbalance, right? That's what causes the imbalance between buyers and sellers, right? Suddenly you start seeing a lot more sellers than buyers, which is why I had such a big problem with that bullshit analysis you see from so many YouTubers with 500,000 subscribers, 1 million subscribers saying, because of ETFs, price is going to go up forever. You guys know I went on that massive rant, like Cassandra would like to say. I went on a preaching rant where I was just so annoyed with people saying that price will go up forever because it's simple supply and demand. That's not how simple supply and demand works. That's not how simple economics works. You idiot. You clearly do not understand economics for you to call it simple economics. That's not how economics works. That's not how simple supply and demand works. Oh my fucking God. As price goes up higher, you're going to get more people willing to provide more supply. As price goes lower, you're going to get people wanting more of that asset. Okay? That's how supply and demand works. That's how supply and demand works. There's two sides to the goddamn equation, you goddamn moron. I'm sorry, I'm not going to take names over here, but be very careful who you guys follow, okay? Price will never go up forever, because as price goes up further and further and further, there will be more supply coming into the market, because people are going to be more incentivized to sell. All right. Okay, cool. With that, we can continue now. We are going to be, where was I? Jesus. Jesus Christ, man. Man, I sometimes feel a bit bad for you guys, because there's so much bad analysis now compared to the stuff that used to be there back in the day. But the folk with the good analysis, they just weren't getting rewarded with for good analysis, right? So they were incentivized into giving shit analysis too. There's someone who sent me a YouTube video of this dude that used to do good analysis, and I was like, oh hey, so-and-so person, I haven't watched him in a while, let's see what he's up to. And I was trying to get through his content. I'm like, what the hell is he talking about? Holy shit, he's talking about nothing, right? But he used to be so good, but not anymore. And that's because of the YouTube algorithm, I guess. And what people what people thinks is good is not what's really good, right? But YouTube will reward what the people want, and sometimes what you guys want may not be what you guys need. All right. So now we're gonna go ahead. I gave you guys a simple way of how to assess when to get bullish, when to get bearish, clip that out, take a screenshot, etc. Now we're going to go ahead and use a different technique. For this technique, what you want to do is simply turn off your candles and use only your line chart, all right? And again, we're going to be using simple trend analysis. And if you guys think about it, right, what is a trend? Up, down, up, down, up, down, up, down. What's making this move up in one direction as opposed to the moving down? Because I'm going up, down, up, down, up, down, right? What's making it move up overall? The fact that we have higher lows, okay, higher lows, okay. The lows, the downs are not going down enough to undo the up moves. That's what a higher low essentially is. The higher lows essentially say that the downs aren't enough to outpower the ups, right? And that alone should make you guys really question this emotion that you get every time price goes down. Really ask yourself, is this down going down enough to outpower the ups? That's your uptrend, right? So going back over here, okay, what do we have over here? We have up, down, and now this was a inflection point where price could have gone up again, but we went up and went down more than the previous down, right? Or rather the previous up move from, so this was a down move and this was the up move. So this down move was more than the magnitude of the previous up move. So we put in a high, a lower high, and we put in a low and a lower low. So on the weekly time frame, this over here is your downtrend, okay? Now here's what's really, really important to understand, guys, okay? When you have a bull flag consists of a uptrend on a high time frame and a downtrend on a low time frame. Clearly over here, what we've been doing is putting in an uptrend on the monthly time frame and the bi-weekly, and a downtrend on the weekly time frame, right? That's what your bull flag is, guys, okay? It's essentially a downtrend on the flag, and the pole is your uptrend, okay? So how do we assess whether that downtrend, the flag, is ready to switch directions? That is how your bull flag breaks up, okay? What we have to do now is essentially mark out this low, and what the bears want is to continue to put in new lows. The bears want this, okay? So if this is your base case of downtrend, you can basically say that this gets invalidated by no longer putting in lower lows, but now putting in higher lows, right? So if we do this instead, put in, let's say, a high here, come in, put in a higher low, and then put in a higher high. Now you suddenly have an uptrend, right? So what are the combinations of how this could start? This could start with us putting in a higher high, then a higher low. Or it could start with us putting in a lower high, higher low, higher high. So essentially what you're looking for is a high low and a high high. High low and high high. As soon as you have that, you have confirmation that this downtrend is broken and this bull flag has begun its move to the upside. So yeah, with that, we can go ahead and mark out key levels over here too. And you can see that we are currently testing a key low on a candle closure basis. Oh, man, we have so many charts to go through. A lot to talk about today. We talked about this already. So you guys can avoid, like think about it, okay, guys? If you watch this chart over here, it looks so volatile, right? It looks so volatile. If you guys just remove the noise. Remember, indicators are noise, and candlesticks are an indicator. They are indicators. Remember that. Your candlestick alone is an indicator. How do you smoothen out the noise? Just remove the candlesticks and then just look at the line chart. The line chart is essentially a derivative of all your candle closes, right? So this is just showing your candle closes. One of the best ways to follow the mango principle of waiting for candle close is just to remove the goddamn candles. You're forced to watch this. Or just another trick that you guys can do is say, you know what, if I'm trading the weekly time frame, I'm only going to check the charts every weekly close. I'm not going to watch anything in between, because that's how you get kicked out of your positions. Imagine how many of you, be honest with me, how many of you would have wished that you were just sleeping for those 3 days or on vacation with no network whatsoever, and then you come back and you're like, oh, huge wick, and now this, right? So if you're looking at the candle closes over here, what you're looking for is something like this, like this, like this. Okay, looking for high low compared to these guys. I wonder actually, could we put it in an ascending triangle like this, leading into October? All right, I think we are almost done, because now it's Q&A time. There were 2 questions that came in, one from Tomax and one from Sherwin. Again, if you guys have questions, I encourage you to ask them on the Discord. You guys can find us at themangoway.com/Discord. Join if you guys are interested in a fun family-like community. There's no stupid questions whatsoever in our Discord you can ask, and there's a ton of great people answering questions, right? You can always ask. Anything. Because we all started off knowing nothing. All right. Tomax says, Sean Dexter, to me 2 things are interesting and relevant that I didn't trade at all in the past, given that I did not trade at all in the past few weeks, and these temporary drawdowns have no effect on my long-term 1 to 10 year holdings. Hey, good job, man. Well done. I'm proud of you, bud. Then he goes on to say, a bit more abstract. You had mentioned before, you're working on some stuff to better time the cycle high. Yes, I am. Based on price being out of equilibrium. Exactly. He's clearly watching all the videos. Cool. goes on to say, if I read correctly before between the lines, would love to hear some thoughts around that, given that this isn't for the cycle. Okay, so let me try to understand your question. What are your thoughts? Basically, he's asking me what are my thoughts in regards to equilibrium and the cycle top. Yeah, that's actually a good question. I can't go into the nitty-gritty of things over here because that's going to require an entire video on its own. I will likely be doing that separately. I may put that on the premium video sections for the dashboard, by the way. For those of you who don't know, we do have a premium video section over here where I have been doing the series called The Puzzle Unfolding, right? There's the Puzzle Unfolding Part 1, Puzzle Unfolding Part 2, and then Part 3 should be coming out very, very soon. I do have a lot to talk about in regards to that, right? So I may do it in there, or I may actually do a daily video on it. I'm not entirely sure, depending on how much previous knowledge is needed, right, to understand everything. But in regards to the equilibrium and cycle highs, this is how I'm looking at it. The fact that we are, if you look at what has been going on now in regards to the monthly 10 SMA moving up and price constantly closing above it, the mango dynamic moving up and prices holding close to it, and now the fact that if this continues to right here, okay, the cloud, if you guys remember back over here in March, I had said that if price continues to move in its parabolic nature, if it continues to move up, I'm going to turn bearish, because we had moved now so far out of equilibrium compared to the cloud, right? Over here, I was bullish because this was clear disequilibrium to the bear side. Over here, I was getting bearish because it was turning disequilibrium to the bullish side. I said that we needed consolidation for me to look for the cycle to continue. I said this. If we keep going, I'm going to be calling for cycle top by July. By July, this cycle is going to end. So we needed to see some consolidation for us to push the cycle to at least November, December, right? Now, at this point, it's making me that much more confident that we will see a cycle run at least to Feb, March, maybe June, July, right? So I would say it this way. I would no longer be surprised if this cycle runs all the way to next summer. I would no longer be surprised. So what we have seen over here with price coming into equilibrium with the green cloud, it's a good thing. It's a good thing because we can run now and put more space between price and the cloud, and it'll be like, cool. Our disequilibrium now is somewhere around here as opposed to being somewhere around here, right? Because if price kept going, over here, that would be us being too far away from the cloud. We'd be like 157% away from the cloud. The relevant cloud underneath us, and I wouldn't have liked that. Now, let's say we do something like this, right? And the cloud moves somewhere here. Well, I could measure that, and now we're 150% away from that cloud, from the relevant cloud at the time, right? So that's how I'm going to be looking at it. That will put us at around, again, 150, 160 in a healthy way. In a reasonable way. I wouldn't say that, we'll have to reassess. Okay, going back to his second part of his question. Yeah, it was an abstract question, so I'm going to need a lot more time in a separate video to dive into the proper analysis of it all, but I hope that helps. Second part was more concrete question. How do you think about others D and getting into all trades at this stage of the market? What exactly do you look for when deciding which coins to get into, given the vast number of options? Ooh, that's a good question. That's a good question. When I first skimmed through your question, I didn't read the second part of the question, but that is a good question. you guys may not like my answer, but it is gonna be what it is, because I'm trading meme coins, right? The first part of the question. How do I decide? First you got to answer this. How much of your allocation do you want to put into altcoins? And that is decided by us watching the trend on Bitcoin dominance. Okay, I've been redundant on this for a while now, but I think I should say it again to drive the point through. As long as the trend is up, you gotta be staying max Bitcoin. Okay, you guys remember back over here, we were ready to start switching into a stronger altcoin position. We were 95% Bitcoin, and we were getting ready to switch to 75% Bitcoin max, right? So basically reduce our Bitcoin holdings and get more altcoins. But then we had to flip. Why? Because price action told us otherwise. As soon as we failed to continue down over here and broke back up over here, okay, we had to say, hey, this is no longer being played on the weekly time frame. This is an uptrend on the monthly time frame. You have to listen to price. Don't listen to your emotions. Don't play what you want to happen. Play what is happening. And what was happening was that Bitcoin dominance was telling us very clearly that the trend is going to continue to move up. So we said we have to switch back now to going back to 90% to 95% altcoins. Sorry, Bitcoin, 90 to 95% Bitcoin, right? So that means you have only 5% to 10% to play with in regards to altcoins. That alone is protective. This is why I keep telling you guys, trend trading is risk mitigating on its own. If you trend trade, that in itself is risk mitigating, because you can't be a trend trader holding a downtrend, right? I mean, you could be holding a downtrend in a short position, but you cannot be in a bullish position on a downtrend, right? Because you're not a trend trader. You're not a trend trader at that point. So if you want to call yourself a trend trader, you need to follow the trend. And if you are following the trend, it is risk mitigating on its own. So it forced you into a 10% to 5% allocation of all coins. Now you got to divide that, such a tiny position of your portfolio, into your altcoins, right? So what were we looking at? We were looking at others.d. Okay. And again, I haven't changed my analysis on this. I think this is still true. I still think this zone over here is your zone of max opportunity. But remember, guys, because Bitcoin dominance is moving up, you are allocating a very small portion to this zone over here. Okay, so you're DCAing into the zone, and this zone is a downtrend on its own because you don't know when this is going to reverse, and you're slowly getting into alts. Maybe you're already max allocated, and you're like, all right, cool. It's such a tiny position of your portfolio that you can honestly let these things kind of do bad and not really affect your portfolio. Because think about it, okay? Think about it. People allocate on a Bitcoin leverage trade. Where's my drawing tools? People allocate on a Bitcoin leverage trade around 2% of the portfolio risk, right? If you are only saying 5% of my entire portfolio is going to be put into altcoins, you could legitimately handle a 50% drawdown across your portfolio and still be only at 2.5% risk, right? But your upside is massive, because when alts reverse from here, they're like, some of my altcoins are like bouncing. The bounces alone are like 250% and 300%, etc., right? So you get like 10x wins, but you're risking such a small percent. So how do you allocate with this mindset that as long as Bitcoin dominance is moving to the upside and Bitcoin's trend, by the way, Bitcoin needs to be in a bullish posture against USD, the combination of those two is gonna keep me on the right side. Because if Bitcoin dominance is looking so good, I'm going to be allocating mostly to Bitcoin, 90 to 95%. And as long as we're holding this zone over here, I'll allocate towards altcoins, because if they do rally, I have a massive win, like 10x wins. Those are the kind of wins you're looking for, right? On your altcoins. So that's kind of how I'd be looking at it. And to analyze this chart over here specifically, how am I looking at others.d? We were looking and hoping that all coins would hold this zone over here. You can see this like inverted head and shoulders that we put in and broke up and then put in a rising channel. We're looking for this zone to hold, but we put in a bear flag here and broke down. At that point, it was kind of obvious that we're going to make our way down to maybe even 8.8 is what I would say, and we kind of only wicked off that. But failing this, bottom of this orange zone over here at around 8.3, 8.2. This could reverse. You don't know when it's going to do that, but now at this point you're looking at this 10.1% zone to recover, or rather to be reclaimed. Right? Now the final part of your question was, what exactly do you look for when deciding which coin to get into, given the vast number of options? Okay, this is a really, really good question, and it takes me back to one of it's kind of like a reverse Michael Saylor. How do I put this? I'm trying to best phrase this for you guys without misleading you guys. Okay, so what does Michael Saylor say? Michael Saylor often says diversification is a representation of your ignorance, right? Basically, diversification is for those people who are willfully saying that they are ignorant, right? Right? And he says it in a more derogatory way. Of course, he's not trying to be condescending, but I use that to willfully admit that, hey, you know what? I am ignorant when pertaining to all coins, and especially when it comes to memes, because I have exposure to multiple meme coins right now, many of them which have done fantastic. And I told myself that, you know what, Sean? You don't know which meme is going to do well. You are ignorant. Okay, but I want to have exposure to the meme coin space, right? So what I did was I said, okay, you know what? If I want to have a certain percent of my portfolio allocated to a meme coin, I'm not gonna sit here and fool myself into telling myself, you know what, Sean, you know which meme is gonna do well. You know exactly which one is gonna do well, because I haven't put in the work to find out which one's going to do well. It's going to be a lot of work, right? But what I do know how to do well is technical analysis, assessing order books, assessing liquidity conditions. Those are things that I do know how to do well. So I will assess all of that. I will make a list of coins that are doing well in those criteria. And then I'll say, okay, based on the allocation and risk that I want on my portfolio to these coins, I'm going to divide those coins, divide my position size amongst all those coins. So I created like a basket of coins where they could all dump 50% on me and I'll still be fine, right? That's how I have positioned myself to have exposure to these meme coins while fitting my risk profile, right? Because I am willfully saying that I am ignorant on these coins and I want to diversify. But when it comes to my core holding, which is Bitcoin and my wealth positions, etc., I'm not going to say I'm going to diversify on those. I am going to say I want to willfully know what I'm talking about and educate myself, right? My alts went from 50% to 5% of my portfolio without me taking action. You want to see it go the other way, Oliver, where they go from 5% to 50% of your portfolio without taking any action. Okay, are we good? Any questions? I'm gonna take a break. Man, what kind of music is this, man? There we go. The final question is a pretty easy question from Sherwin. It may seem complicated, but that's exactly what you want to avoid, is making this kind of thing overcomplicated. Sherwin says, I'll have to miss the stream and watch it later, but I was wondering what you think about the Japan carry trade. Do you think the leverage it had has been unwound? Was 1 week enough to balance out the trade? Or do you think it will take much longer for the leverage it created to disappear? It doesn't effing matter. It doesn't effing matter. You know what matters? What matters is what the entire market thinks in response to the event, okay? Even if it needs to be unwound, but a lot of market participants come in and say, you know what? We think that this event is a huge buy opportunity. People have gotten completely irrational and over anxious and scared. I'm going to be using this as an opportunity to enter the market because I've been sidelined for far too long and I don't want to miss out on this massive opportunity. If a lot of people come in with overwhelming buying power to overwhelm the selling that comes from the unwinding, does it matter? Let's say I say, yes, there's a lot more Japanese carry trade that needs to get unwound. I could be right on that and still be wrong on Bitcoin pumping, and that's what you really care about, right, Sherwin? That's all you really care about. So that's what you should care about, right? That there is more buying than selling, even if there is more to be unwound. The unwinding may not matter. Similarly, the flip might be true, where the unwinding may be completely over, but people are so scared of what has happened that there's overwhelming selling power that comes in to hedge their positions, right? So let's say I say it's over. Is it going to matter? Is it going to matter if price dumps? Is it going to matter? No, what matters is that people have either one, we don't know that something's broken because the unwinding might be done and something may have broken. Some fund may have gotten completely wrecked and he may be selling positions that other people are holding as collateral for their Bitcoin positions. So their collateral gets eviscerated, right? Their collateral gets eviscerated and suddenly their Bitcoin positions are unbacked or eviscerated, they've gone down, and then they get margin called, they have to sell their Bitcoin, and you are indirectly exposed to something that has broken without you realizing it, right? How do you know that this is all happening? By watching price. So if we start seeing price get rejected over here and keep coming down, we know what's up. We know that, okay, cool. We know that this is something is up over here and we need to be careful, right? So it doesn't matter, man, whether it's being unwound, whether it's already unwound, or if there's more to be unbounded, if that's a word. We have to watch price. We have to watch price. Speaking of people, speaking of irrationality, this has been one of the most exciting target rate probability charts I've been watching for a very, very long time. The volatility on this thing has been insane. So I'm not going to go through the numbers over here for you guys. I'm just going to tell you guys a story of what was happening while this Japan trade was getting unwound and all of the markets were dumping and breaking and blah, blah, blah. Watching how the bond market has been, or rather the futures market has been pricing in the Fed coming in and cutting in September has been an absolute, I don't say joy, but it's been amusing. Okay, at one point they were the market was essentially pricing in an 80% chance for only a 25 basis point cut. Okay, so only like minimal cut. Then that switched to that being 20% and there being a 50 basis points cut, like an 80% chance of a 50 basis points cut. Okay, cool. And then things got worse. Now, then people start saying, oh, no, there's going to be a 90%, 95% chance of a 50 basis points cut. Then things got even worse. They're like, no, 50 basis is not enough. The market needs, the Fed needs to come in and cut 75 basis points, which means 3 rate cuts in one meeting, right? So at one point, they were pricing in a 25 to 20% chance of 3 rate cuts in the next meeting. Then it got even worse, and the market said, no, even that's not enough. The Fed needs to come in before September and do an emergency rate cut in 2 weeks, right? That's how crazy things got, and that was an indication of how emotional even the markets got, right? Like over emotional, like people's moods were swinging, man. And now look how things have swung. Now they're like, you know what? Actually, there's only a 50-50 chance that the Fed actually cuts 50 basis points, right? This went from zero, with this over here is your 25 basis points cut. It went from 80% down to 0 chance, now back up to 44%. Just to show you guys how volatile the bond market's expectations has been. So yeah, this has been crazy times. A lot to learn from the most recent price action. A lot to learn. Let's go look at what Bitcoin's on the daily now, and we're going to just wrap up. Yeah, pulling back over here. We do have resistance on multiple time frames. 59,771 now. Yeah, wants to come down. So if you guys do remember, in the last live stream, we talked about this rising channel over here, and we said this needed to break down. This is needed to break down for a healthy price action. I was looking for a quick tip for you guys. When you have a rising channel or a falling channel, a high probability trade opportunity is the second lower high or the second higher low. Okay, over here would be the high low since you're looking at a rising channel, and you can see the second high low is where we bounced. So it's a rough guide. Eh? You want to use Confluence. Now, what's going on over here? I don't know. This looks like an overextension of a play. Oscillators are down, dumps, the 4 hour. Not much over here either. What's the 12 hour doing? Yeah, resistance over here. Do we have bearish divergence? A tad bit of bearish divergence that could trigger. So could watch the 12 hour time frame over here, to be honest, guys. And we could be putting in a high low. Where would I look for the high low? Let's go look at the daily. Yeah, somewhere around 58K, I guess. Somewhere around this zone here. Right? See what the 4-day is saying. 4-day says maybe even lower 57. 4-day stocks have now crossed bullish again. Kind of have some bullish divergence over here on the 4-day. Over the weekly. Weekly has bullish divergence. Double bottoming on the weekly while lower low on the weekly. So keep that in mind too. Monthly stocks. This could turn bullish or could turn into a problem. So yeah, look for around 58K to around 57K, 57.9K. Gabriel, I wouldn't get too caught up in the rate cuts. I don't think the rate cuts are going to matter as much. What I would look for actually is whether they start reducing their quantitative tightening, right? You want to see them reducing the pace of their QT. That I think is going to matter a lot more. You kind of also want to watch what Dixie is doing, what the PBOC is doing, because global liquidity is not coming in from just the Fed, right? Global liquidity is coming in from combination of multiple factors. You want to look at things like ISM, PMI. One of the things that's a bit concerning, we can look at that in a different video, but PMIs have not really crossed over the 50 region, and that's when you really see liquidity conditions improve, right? When PMI improves, and that's yet to happen, which could, one, indicate that we have more downside, or two, indicate that we have a much longer cycle ahead of us. Could be both. But the rate cuts are not going to matter as much. Just think about it. Rates have been high for, 8 months now, right? And the market has been just rallying. So if rates have been high and the markets are already forward pricing liquidity conditions improving because of rate cuts, when the rate cuts do come, I don't think that's going to be a influencing factor. It's going to be more so other things. They're saying that China is going to print in the second half of the year, but they've been saying that for a very long time, dude. It's not really happening. The ISM PMI prediction for the next 3 months is positive based on Paul, Raul, and Mac. You mean Raul from Real Vision? I haven't been keeping track of that. I'm not. So he's forecasting that it's going to improve. That's good to know. I'd rather wait for confirmation though, right? Like, we want to start seeing PMI improve, because once PMI ticks over 50 or actually starts improving, it will stay improved for a long period. So warehouse inventory and new orders. Okay. So he's looking at the leading indicators. because PMI is more of a survey that is done by doing legitimate sentiment interview checks with purchasing managers, right? They go out and actually interview, not explicitly, but just to give you guys an idea, it's a sentiment indicator from the purchaser managers themselves, and that sentiment only improves after the new orders and the inventory comes in. So yeah. All right, I think we'll wrap up here, guys. I hope you guys enjoyed this live stream. I just wanted to give you guys a quick rundown on how to judge your positions, your cyclical positions and your spot positions leading into the cycle. For those of you who are currently looking to hedge, like I said, using the 48 dynamic over here will be your best bet. As long as we're living underneath over here, you guys can look to hedge against the 48 dynamic, because for those of you who are looking to hedge, right, I'm going to be looking for a little bit more confirmation, because I do think that this price action over here, when you look at the weekly, right, when you guys look at the weekly, this is not the kind of candle that you see when a bear market is about to begin. Okay, now if we close this candle like this and then we close underneath 55,600, I'm like, all right, cool, this is rejected. The market has basically said, nope, we don't care about how much this was picked up. We think the situation has turned worse. We think that it's good to hedge. We think that we should be selling here, and the amount of supply that's coming in is likely going to outweigh the demand in the future as well, and we're going to see further downside. Now, until that happens, though, I'm going to stay in my bullish posturing for the cycle. Until the next one, do the mango way, do the easy way, do it the stress-free way. Ciao. I'm exhausted, man. I'll probably do a live stream either on Sunday or Monday. Make sure to hit the subscribe and the notification icon so you guys don't miss the next live stream. We'll also be sending out a notification on the Discord. You guys can find us at themangoway.com/Discord. Yeah, themangoway.com/Discord. Do the mango way, do the easy way, do the stress way. I love you all. Ciao.